We've heard from most of the major retailers this earnings season. A common theme among these companies, whether they meet, beat, or miss expectations, and the weakening consumer. So, how can investors take this knowledge into account when considering adding retail names to their portfolio? Joining us now, live in living color, we've got Eric Fisch, HSBC U.S. Head of Retail and Apparel. Great to see you here today.
You too. Thank you.
So, investors want to know, how can they effectively know if a company is strong enough to weather the storm of some of the fading consumer sentiment that we've seen, even as evidenced through today's University of Michigan survey?
Absolutely. So I think what we've seen over the last couple of years is companies get leaner in the retail space. So reduce inventory, cut expenses, and really concentrate on the highest margin lines that they have. So that's what I would be looking for. Most of the retailers have done exactly that. Inventories come down, margins have come up, and they're positioning themselves to not get too hurt as consumers adjust sentiment. The real question is, can those retailers position themselves for growth if stock is so low? So are they poised for the rebound?
And Eric, how do they walk that fine line, right? Because they want to make sure, obviously, that they don't have inventory ballooning, because then that, of course, leads to potentially more promotional activity ahead. But they also don't want it to weigh on growth as well, and just in terms of not being able to stock the shelves.
Yeah, it's a very fine line. These products have very long lead times. So you have to make a decision now about holiday and even into spring. And so it's about stocking the core styles, items that you know year in and year out perennially will be popular, and then taking risks on fashion products and hopefully not getting too hurt.
That means my closet is not taking a ton of risks right now. I mean, it's basic colors and textures, fabrics. It's looking kind of bland. I'm trying to, insert a little bit more creativity into there. But what does this mean for the companies right now, and who is best positioned from your purview?
Sure. So in this industry, what you hope for is a change in people's lifestyle. So lockdown, we all adjusted, bought more pajamas and everything else.
Every day.
Or a change in trend. So denim as an example. It was a skinny silhouette for a decade plus, and now we're getting a looser style, a lighter material, and all of a sudden people are turning over their wardrobes, and so that's a great position for denim.
How critical is the product innovation? And just drawing on the news that we had out earlier this week, Lululemon letting go their chief product officer, lots of questions and lots of talk just about what ultimately that means then for Lulu's design then going forward. When it comes to that critical piece of innovation, what does that mean? How important is that in order just to drive those sales going forward?
Yeah, it's pretty key. And there's two areas I would say of innovation. There's style innovation, right, being at the bleeding edge of the trend, but also that materials innovation. Everyone wants comfort. And so that's permeated every item we have, whether it's these blazers or denim. And so continuing to see both of those work in parallel, comfort along with trend. Companies that are able to intersect those two are the most successful.
What about promotion? What are we expecting of the promotional environment as consumers are looking for value hacks, looking for deals right now?
Yeah, so at the regular price product, promotions are going to be strategic. So there's not that much extra product out there, and so companies are going to use it as a tool to get shoppers in. At the value end of the chain, so off price, that's where a lot of consumers have really been attracted over the last few years. More to off price, looking for brands that they like at much reduced prices. And so that's a great opportunity both for investors but also for consumers.